What happens when XRP is adopted at scale? We have new info from Jake Claver on XRP, Ripple Prime, and a ton of other news and information in this video. Let's just jump in. First, Jake has asked, why are you all in on XRP? That single question is becoming the heartbeat of this entire moment in crypto. Because when you listen to people who've done the deep work, the ones who aren't chasing hype but are building long-term conviction, they all say something similar. I tried for years to prove myself wrong, and I couldn't. And that's exactly what Jake Claver said. A year and a half spent waking up every single day, trying to poke holes in his thesis, trying to see where the model failed, trying to find the flaw in the logic. And instead of crumbling, the thesis only got stronger. That's when you know you're not dealing with speculation. You're dealing with structural inevitability. And right here, this is the moment where you must start paying attention, because the early windows on financial revolutions don't stay open forever. If you're serious about getting ahead of this next major shift, get into XRP Insider's Elite. You'll get XRP Insider alerts, millionaire mindset frameworks, and the real strategies top investors quietly use before the crowds catch on. Don't get left behind. This is where the future winners position early. Use code millionaire for 10% off. It's in the video description. Back to the core thesis. Jake's reasoning is simple but powerful. XRP is the only asset strategically positioned after 13 years of battle testing to handle the back-end settlement rails of global institutions, market infrastructure, and cross-border commerce. Not flashy front-end stuff, not consumer-facing speculation. We're talking the hidden plumbing of the global economy, the pipes that move value where it needs to go at speeds and scales the current system simply cannot support. And if you believe in long-term investing, if you genuinely understand that true generational plays take years to mature, then XRP starts looking less like a coin and more like a once-in-a-lifetime asymmetric bet. Jake went all in on XRP back in 2022. And he's clear, the 4-year time horizon hasn't even arrived yet. February 2026 is his marker. And even before we get there, his investment already saw more than a 10 times. But here's the fascinating part. He isn't celebrating. He isn't selling. He isn't calling the move done. He's doubling down even at $2, $3, because he knows conviction isn't about the price today. It's about where the value has to go once the system fully transitions. And that's why he makes the bold statement most people aren't ready to process. Over the next 10 years, XRP could hit $1,000, $10,000, even $100,000. And he's not saying it from hype. He's saying it because when you position yourself as the only asset capable of massive institutional settlement infrastructure, when trillions in volume need an instant, compliant liquid bridge asset, the math stops being emotional and starts being mechanical. It's simple supply, simple demand, and extreme utility. If that system flips on, early holders get rewarded at a scale that currently sounds impossible. But so did Bitcoin at $1. So did Ethereum at $7. So did Solana at $50. Every major asset sounds crazy until it becomes obvious. And when he says, I'd be a multi-billionaire, he's not joking. And neither are the institutions now pouring in, because the real story is happening behind the scenes. Institutions don't chase hype. Institutions chase necessity. And that brings us to Sandy Cole of Franklin Templeton, one of the most respected voices in institutional finance, who openly said something that most XRP investors have been waiting years to hear. XRP is one of the only chains with its own stablecoin, RLUSD, combined with a public chain and independent verification network. That combination is rare, and it gives Ripple the ability to build full-stack financial infrastructure, not just rails, not just liquidity, entire business ecosystems. And institutions love ecosystems because ecosystems mean predictable revenue, reliable settlement, and scalable growth. Call isn't speaking in hypotheticals. She said they've been working with Ripple in Asia for years. While the lawsuit in the US slowed them down, Ripple kept building abroad at full speed, and now that momentum is spreading from region to region. And she hints at what truly matters: the coming wave of computer-to-computer transactions, automated settlement, machine-driven commerce, AI to AI value transfer. These systems do not work with slow, expensive, congested assets. They demand speed, compliance, instant finality, and predictable cost. That's XRP's entire design. And once institutions truly move into that system, it won't be retail buying a few hundred tokens. It will be machine-triggered demand, constant automated flow, and system-level liquidity extraction. That is the moment where price stops behaving like a cryptocurrency and starts behaving like the backbone of an international settlement layer. Then you have Matt Hogan from Bitwise explaining how they secured the XRP ticker years ago, not months, years, because they already knew where the industry was heading. Institutions don't plan for next quarter, they plan for the next cycle. The fact that Bitwise filed for the ticker years before XRP even had regulatory clarity tells you everything. They understood adoption was inevitable, and now they're leading the ETF flow. And the conversation around the Market Structure Bill and the Genius Act is even more revealing because regulation isn't just good news. Regulation is the starting gun. Hogan said it clearly. When that gun fires, some companies will build, but many will buy. M&A will explode. Tradfi firms will race to buy the crypto-native infrastructure they can't build fast enough. And crypto-native companies like Ripple will also begin acquiring traditional financial firms to bring those customers and networks into the new rails. This is not a one-way takeover, it's a merger of worlds. And Ripple is already executing that strategy before the rest even gets started. That's why Matt Hogan said he expects bilateral M&A over the next 12 to 24 months. Ripple buying TradFi, TradFi buying crypto, everyone scrambling for infrastructure while there's still infrastructure left to buy, because once regulatory clarity hits, it's too late to start building. You either have the infrastructure or you don't. The idea of limited infrastructure isn't a theory anymore. It's already playing out right now with tokenization, with liquidity platforms, with settlement networks that are being snapped up long before mainstream headlines catch on. And what finance said drives this point home with brutal clarity. If you're not at the table, you are on the menu. Institutions no longer see digital assets as a curious experiment. They're treating it as a competitive requirement for survival. And this mindset shift is coming from the very top. Bank leaders, fund managers, treasury networks, global settlement platforms. They understand that the firms who move first will end up controlling not just the narrative, but the value chains. They'll set the rules, they'll lock in the rails, they'll get the sticky relationships that competitors can't rip away once the transition begins. That is why you're seeing major players sound almost desperate in their messaging. Jump in now or get left behind. Fast follow strategies won't work this time because the earliest builders are already shaping the ecosystem. That's why tokenization is accelerating, not hype cycles, but in real world, highly regulated environments, because institutions finally have the tools they need. Compliant privacy, enterprise-grade security, open networks that can integrate with existing financial systems, and blockchains capable of handling high-volume workloads. But most of all, they have clarity around where things are heading. And once institutions get clarity, they move decisively. This is where XRP's advantage becomes undeniable, because tokenization, whether it's real-world assets, currency, commodities, or equities, requires interoperability. It has to move seamlessly between systems, jurisdictions, and regulatory frameworks. And the chains capable of doing that at scale are not many. In fact, there might be only one that checks every box while still maintaining decentralization, finality, compliance, and liquidity. That's why you keep seeing XRP mentioned alongside tokenization narratives and settlement discussions by people who normally never touch speculative altcoins. It's not because they're fans, it's because they're realists. And that's exactly what we heard during the Round T conversation about breaking the bonds of Bitcoin. The moment investors start allocating beyond Bitcoin into Ethereum, Litecoin, XRPS, interoperability plays, privacy tools, tokenization infrastructure, the conversation becomes more sophisticated because Bitcoin is an entry point. XRP is a use case point. It's not just a store of value, it's a functional financial layer. And institutions have no choice but to take functional layers seriously once tokenization and real-time settlement enter the picture. Chainlink was mentioned as another critical piece because interoperability and data validation will underpin the entire tokenized world. The same applies to Axel, another chain focused on bridging ecosystems. What's emerging is a clear outline of which infrastructure is necessary for the next phase of finance. And the theme is consistent: speed, security, interoperability, regulatory alignment, and scalable throughput. These are not qualities of hype cycles, they're qualities of global settlement systems. That's the environment XRP was literally designed for, long before most people even knew what tokenization meant. And this institutional perspective highlights something retail often misses. The shift isn't coming, it already started. The seeds planted this year in privacy, governance, interoperability, and security are exactly what will enable the full-scale tokenization wave. And when those seeds sprout, institutions won't dip their toes. They'll jump in with force, which is why we're hearing messages like, the digital asset era isn't an experiment anymore. It's here. It's regulated. It's infrastructure ready. And the firms that embrace it now will dominate the next decade. Wisdom Trey's report proves this thesis better than anything else, because for the first time, we have cold, verifiable data showing exactly where professional investors are putting their money, not their opinions, not their tweets, not their speculation, their capital. And the numbers are shocking to anyone who still thinks XRP is some fringe project. XRP is the only major cryptocurrency with sustained institutional inflows across every region: Europe, Asia, the US, even during months when nearly every other asset experienced heavy selling. That is not random. That is not luck. That is not hype. That is coordinated accumulation from investors who understand what's coming. Europe saw over $549 million in new inflows into XRP products, more than Ethereum, more than Solana, more than every altcoin except Bitcoin itself. And outside the US, XRP brought in nearly the same amount as Bitcoin, even though Bitcoin products are literally 25 times larger. That means dollar for dollar investors. Preferred XRP 25 to 1 versus Bitcoin. Think about that. Institutions with far more information than we have are moving capital into XRP at a pace that suggests they already know where this is heading. Same pattern in the US synthetic XRP inflows outperform every altcoin except synthetic Solana, and even then, XRP still beat it. Meanwhile, Bitcoin and Ethereum ETFs lost a combined $6.4 billion in a single month. The divergence is unbelievable. XRP inflows rising while Bitcoin and Ethereum bleed billions. That's not noise, that's structural. And here's the kicker. Institutions aren't buying XRP to flip it. They're not trading it. They're taking it off exchanges and putting it into cold storage, which means they're preparing for scarcity. They know the order flow will eventually overwhelm the over-the-counter desks. They know the remaining supply will bottleneck. And they know that when institutions finally need XRP for settlement, the only place left to get meaningful supply will be Ripple's escrow, and Ripple only releases 1 billion XRP per month, with only a portion actually entering circulation. If Ripple caps distributions around 200 to 300 million monthly, that still may not be enough to meet the institutional demand once the switch flips. And the moment OTC supply dries up, institutions must go to exchanges, and that's when retail finally sees the price action people have been waiting for. That's when a stable 2 or 3 XRP becomes 5, then 10, then potentially much more, depending on how quickly demand ramps. And we're already seeing demand ramp. It took less than 30 days for US spot XRP products to hit $1 billion in assets under management, something no one predicted this fast. Not even the bullish analysts, not even Ripple. That's the kind of acceleration you only see when the biggest players in the world decide it's time to position early. This is not financial advice. In the last few months, the real story hasn't been the day-to-day price moves. The real story has been the structural changes happening behind the scenes. Changes that only show up when you zoom out and look at who is positioning themselves early. Because while retail is still arguing on Twitter about whether XRP will ever move, major financial players are making decisive, deliberate moves that all point in one clear direction. They're preparing, and preparation isn't loud, it doesn't trend, it doesn't scream. It whispers in balance sheets, in reallocation of reserves, in adjustments to liquidity corridors, and in the silent build-out of systems that won't matter today, but will matter massively overnight once the switch flips. A perfect example of this is the consolidation of cross-border payment infrastructure that's been happening without retail noticing. For years, the big narrative was always XRP needs banks to adopt it. But what if that was never the point? What if the real goal was to position XRP as the underlying settlement layer for the transfers banks didn't want to handle themselves? It becomes even more interesting when you recognize how much of the global value flow isn't handled by banks directly, but by the third-party institutions that banks outsource to: money services businesses, payment providers, treasury network operators, companies that specialize not in deposits but in movement. These players don't need retail adoption. They don't need hype. They need efficiency. And XRP offers exactly that at scale with a settlement speed that makes traditional rails feel prehistoric. Once you understand this, the recent expansion of Ripple's partnerships begins to look far more strategic. They're targeting the infrastructure between the banks and the end users, not the banks themselves. And that's where the leverage is. That's where volume hides. That's where trillions move invisibly through the global financial system without a single headline. Because the truth is, the institutions that matter don't care about speculation. They care about throughput, compliance, reliability, and the ability to perform under stress. XRP's architecture wasn't built for a meme cycle. It was built for clearing bottlenecks in global liquidity networks. And those bottlenecks are becoming more visible as macroeconomic pressure tightens and nations begin shifting from old payment structures into tokenized settlement systems. Another major piece of the puzzle is the changing regulatory landscape, which is slowly but undeniably tilting in favor of clarity. Not hype, clarity. And clarity is what unlocks institutional movement, because institutions are like massive cargo ships. They don't turn unless the route is fully mapped, but once the route is mapped, they move with enormous force. And during the past 12 months, we've started to see the early signs of that shift. Not full movement, but positioning. Because positioning comes before adoption, just like liquidity comes before utility. Institutions accumulate quietly, then deploy publicly. Retail waits for confirmation. Smart money waits for opportunity. That's why the recent inflows into XRP-related investment vehicles matter. Not because they instantly impact price, but because they confirm that institutional portfolios are allocating ahead of the full regulatory framework being cemented. That means they're not waiting for permission, they're preparing for inevitability. And inevitability is the word that keeps coming up every time you analyze the deeper macro structure surrounding XRP. Countries are modernizing payment systems. Central banks are experimenting with tokenized settlement. SWIFT is openly testing interoperability models. Ripple is building corridors in emerging markets long before they become mainstream. These are not random events. They are coordinated signals pointing to a future where real-time settlement isn't an upgrade, it's the baseline. But here's where things get especially interesting. Once tokenized money becomes the global standard, and it will, the need for a bridge asset becomes unavoidable, not optional, not speculative. Required because every digital asset network will operate at different speeds, different liquidity thresholds, different jurisdictions, and different compliance models. Something will have to sit in the middle, something neutral, something scalable, something fast, something that doesn't rely on mining, doesn't rely on trusted validation hubs, and doesn't collapse under heavy load. XRP remains one of the only networks that satisfies those criteria at a global scale without requiring a redesign of the world's financial plumbing. And all of this brings us to the most important point of part 3. The moment utility meets necessity, price follows function, not the other way around. Retail traders think price reveals value. Institutions know value reveals price. That's why accumulation is slow, quiet, and boring, right until it isn't, right until a new liquidity standard is adopted, right until corridors open, right until settlement pathways flip from test phase to production phase. And those flips don't happen randomly. They happen in cycles tied to regulation, global monetary restructuring, technology upgrades, and macroeconomic pressure. We are entering that convergence window. Now, if you're serious about positioning yourself before this next major transition fully takes shape, I put together something extremely valuable. XRP Insiders Elite. It's designed for people who want an advantage, real insights, real strategy, real clarity. Inside, you'll unlock weekly XRP insider alerts, advanced breakdowns of the moves the smartest money is quietly making, and a private framework that helps you master the millionaire mindset that actually builds generational wealth. You'll also get full access to every premium resource I've created so far. The link is in the video description, and you can use code millionaire to get 10%